What is up, guys? Welcome to a CMT Lunch Hour. I am Larry Thompson, a resident CMT today, coming from the dirty south of Greenville, South Carolina. Welcome to the show. Today we're going to be running through a bunch of charts. Big week. Bank earnings came out and they look good, right? So that's what we like to see here. Might be time to get the tissues ready for those bears in the market, right? They're probably crying this week after the price action we've seen. So I'll kind of get into it here, looking at some charts. Just quick overview. I'm a CMT by trade, also a CPA by trade. So a little bit of fundamental and technical analysis I'll bring into the mix. I do a lot of top-down analysis. So we'll be looking at the market from a bigger view and then digging into the individual charts. And so let's get cranking. So guys, as we know, since the week of November 25th, the past 6 or 7 weeks, we've had some turmoil in the market, right? We've seen a correction phase to a little bit degree, looking here at XLI, XLF, RSP, VXF, and IWM, right? So hope the chat is prepared for what's coming here, right? Good to see people in the chat. Make sure you're sharing your tickers and the symbols you want me to look at, and I can kind of dig into. Also, feel free to lay some insults in there. So any good stand-up jokes you guys got? Maybe I look like somebody that you know, whatever. But starting here, just looking at the market of stocks, right? Because there's a stock market, but there's also a market of stocks, right? Because the S&P 500 has a high and heavy concentration in tech. And so we like to strip out some of that tech weighting and just kind of see what under the surface is occurring. And you can kind of see the past 2 weeks, we've kind of rebounded off some levels here in terms of the market of stocks. And so when we actually dig into the S&P 500, okay. Lunch hour. I am Larry Thompson, your resident CMT for this episode. Let's get the chat buzzing today. You know, I think it's one of those weeks where you got to get out the tissues for the bears, right? The bears are crying this week. We had bank earnings. We saw some big moves off some bottoming levels. We saw a lot of what bull markets tend to do, and that's rip off the faces of bears, right? And so what we'll dive into today is some charts. And like I said, chat, share what you like, share some charts you guys are looking at, and I'll kind of dive from a top-down view of the market, starting with the market of stocks and then digging into some individual charts that I see good setups in and kind of where we've come from and where I think we can go over the next couple of weeks. So let's go ahead and get into it. All right, guys, I'm going to start here. Basic CMT lesson for you guys is that there's a stock market, but there's also a market of stocks. And so the stock market, S&P 500, right, heavily weighted in tech. 30% of the exposure is tech. And so what we want to do is strip out tech and actually see what's occurring under the surface, because what's occurring under the surface tends to lead what occurs on the top side of the market. So looking here at financials, industrials, S&P 500 on an equal weight basis, Vanguard extended market, and IWM, you can kind of see here that we had a small correction phase starting in November, mid-November, end November, and kind of the past 2 weeks, we've kind of seen the market kind of recover here. And that's what we like to see in bull markets. Those pullbacks tend to become buying opportunities. And so we'll kind of dig in today to some of those charts that we're looking at. And as a chat, I can see chat sending in some charts. After about 10 minutes, I'll kind of start getting into those individual charts. So starting here with the S&P 500, right? So how I like to look at charts is I like to look at the RSI, which is momentum. Obviously, price is king, right? Price is what pays. Price is how we make money. And then breadth is what's occurring underneath the surface. And so as you can kind of see here, since late November, early December, we started making lower highs and lower lows in the market, started a little down channel. And one of the things about bull markets that's great is when breadth, you can see on this bottom panel, percent above a 20-day moving average, when breadth kind of gets poor, that becomes a buying opportunity within the context of bull markets. And so that's what we like to see, is we like to see within the context of bull markets, breadth kind of deteriorate, and we don't want to buy weakness. We want to buy strength after the weakness. And so if you're following me on Beehive, Twitter, or StockTwits, I've highlighted how we wanted to wait until the percentage above the 20-day got to over 30%, and that's what we're starting to see. We're starting to see this not a top pattern occurring. Big, big stuff. I'll break down just breadth a little bit more. Underneath the surface right now, we're seeing improvement in the 20-day moving average, a more tactical time frame. But you could see on a longer term time frame, the percent above a 50-day, we still need more stocks getting above the 50-day. And that's something that we're working on here, is trying to get stocks to take what's been a short-term move and turn it into a longer-term move that realigns with the longer-term trend. Here we go here, longer-term zoomed-out version of the S&P 500, right? You can kind of see here we have put some Bollinger Bands, which is just some standard deviation moving averages, and you can see we've had these buying opportunities in the market. And what we have here is another buying opportunity into that weakness that then became strength. And so that's what we like to look for here. Like I said, get the tissues out for the bears, right? And chat, I know you guys are sharing some charts. I'm excited to dive into those in a little bit. Just kind of want to set the scene before I get into those individual names, because the reality is stocks tend to move together. And for any of those individual setups to work, we need underlying strength within the market. Big, big week for banks, right? Earnings started this week, kicking off with Goldman Sachs and JP Morgan and Wells Fargo and names like that. And what we saw here was a beautiful bear trap, right? You had stocks kind of pull back, and while stocks pulled back, we had momentum, RSI, make a higher low when stocks made a lower low. We had clean levels to trade against. And underneath the surface, like I mentioned, the reason you focus on breadth is to see underneath the surface, we had support, right? We had the 200-day upward sloping. This is when you don't buy the weakness. You wait till you get back above some key levels here, and then you can see we've had follow through green every single day this week. So like I said, pour one out for the bears, because it's been a struggle this week for the bears. What a beauty Bitcoin is, huh? Looking at Bitcoin, right? This is the epitome of what happens in bull markets. You get these scary looking topping patterns that fail. And Bitcoin's ripped this week, right? From that $90,000 range to $104,000 right now. And that's what we like to see. We like to see these patterns fail the breakdown. And that's really strong. So chat, are you guys in Bitcoin? Let me know if you guys are in Bitcoin, or if you guys are selling into this strength, or are you guys buying some of this strength? You think it's a result of maybe the Federal Reserve making a little reserve currency for Bitcoin? What do you think? One other thing about the market I like to look at, this is a daily view, right? You have about a year worth of price action. And then if you zoom out, speaking of presidential elections, right? This is a monthly chart since inception of Bitcoin. You can see after every single election, Bitcoin has made some huge runs. And since the start of the 2024 election, we've also had a huge run in Bitcoin. And so sometimes if you're looking at a longer term trend and you have a longer term mega trend in your mind, zoom out to a monthly chart, right? And you can kind of see here, it's kept you in this bull market since that 2024 election that occurred when Trump won. So that's what we like to see here. We like to see these patterns continue to resolve, whether that's sideways or up, right? Because sideways during a correction phase is great, because it just shows that it's digesting supply via time, which is what we like to see. The biggest and most important sector in the market right now, in my opinion, is semiconductors, right? So we just have to keep an eye on semiconductors. And so within semiconductors, it's one of the largest segments. It's the epitome of this bull market, right? NVIDIA, AI, semiconductor chips, this coiling pattern that we had here, it needed to resolve higher. And what are we getting this week? We're getting a resolution higher. We're seeing a huge bull pattern here, a huge bull candle. And you're seeing on that bottom panel on a relative basis that, semiconductors are starting to outperform again in this market. And that's what we want to see in bull markets, right? We want to see Michael Jordan on the court. We want to see the MVPs scoring the points. And so if semiconductors get going here, there's the bear thesis gone in the dust. Under the hood within semis, stock like AMAT, Applied Materials, right? Like we talked about what happens in bull markets. On a weekly basis, we saw a pullback into a polarity level, right? Polarity just means former resistance becoming support, right? Clean level to trade against this week. I shared this chart on StockTwits, right? Clean level to trade against, and now we have 11% move in a week. That's what we like to see. Clean risk reward scenarios that we can play, because this is a game of poker. This isn't chess. We're not trying to have 700 pre-planned moves. We're just trying to find a set of cards, a hand that has great risk reward. And this is one of those names within semiconductors. Another name, Marvell, right? You're seeing this huge base breakout. And then as the market's corrected, like I mentioned earlier, the past couple of weeks, we've seen Marvell just trade sideways. That's how you get on this bottom panel relative strength. We want to buy these relative leaders. We want to buy the stocks that are either going down or up during periods when the overall market's correcting, because those tend to be the ones that resolve first. That's what we're seeing here in Marvell. And then Micron, right? A classic. Everyone knows about Micron. Micron had this base, right? Like I said, a pullback, and now you have that clean $100 level you can trade against if you like it. It might start to see some weary here against 110, but the bigger point here is the bears had their chance to break down the market, and they couldn't do it. They had all the news, all the bad news come out. They've had every speculation of what Trump's presidency is going to look like. And what's happened? The bears failed, right? And so when the bears fail here, you tend to see quick moves in the other direction. Last chart I'll say relative to semiconductors is NVIDIA, right? The bellwether for this sector, kind of the poster child for this bull market. Everyone loves Jensen Huang. And what have we seen here? We've seen a correction via time, right? It's been about 150 days of sideways price action in NVIDIA, and that's not bearish, right? A correction via time is not bearish, because during this time, they're able to consolidate. They're able to digest some of the overhead supply in the market and set up for maybe that next leg higher. So what we really want to see here in NVIDIA is it hold this lower bound of 130 and just let this sideways chop, and then just look for a breakout in NVIDIA, because that name could really run. So chat, keep sending some charts. I'll actually get into a couple of the chart requests here right now. I'll get into a few, and then I'll kind of get back to some of the deck that I was looking at. So let's go ahead and get into some individual charts. All right, guys. Let's take a look at some individual names here. Starting with Uber. People really like Uber, right? Set up in Uber here. This is a weekly chart looking at Uber, right? Let's clean this up a little bit. Let's get rid of some of the mess in the chart. You see here a huge, huge base in Uber, right? For the chat, we like bases, right? You see this huge base, and then what have we seen? This looks a lot like AMAT. It looks a lot like those other charts. We've seen a pullback right into support, right? Right against this 65 level. You have pretty clean risk reward against that 65 level, right? It did form this not a top looking pattern right here. But if you like that clean level against 62.50, $60 area, right? You have this, what I talked about. You have this polarity zone that we like to see. We like to see these polarity zones. Just quickly. Former resistance, becoming support, becoming support, becoming support, right against that $60 level. And you had that fake out candle a couple weeks ago, but in the market, you're going to get whipsaws. And so what you have to do is, if you have a view or a thesis, you have to be willing to sell and then be willing to get back in when risk kind of presents itself. But if you like Uber here long, I think you manage risk against this $60 level, because as you can kind of see on this weekly chart, you have this huge base and this consolidation that looks like it could break higher, right? Looks like a lot of those other charts I kind of walked through. I'll take a quick look at the daily, see if there's any more tactical time frame where we could enter. See, shorter term, it's a little bit messy, right? We have some moving averages, it's above and below. We kind of have sideways chop. And that's why on a pattern like this, I'm sure your thesis is more long-term, right? I'm sure you like the business plan. I'm sure you like the fundamentals. I wouldn't be trading this name. This is a name I would be looking at for a longer-term play. So good job, chat, with that one. That's a good look against that 62.50 area for Uber. Next chart we'll look at Asia Broadband. Not familiar with this name, but we'll take a look, right? So longer term time frame, let's clean up this chart real quick. Longer term time frame, it's in a downtrend, right? That's right. Higher, lower highs, right? So you just have this channel forming in the stock like this. Not something I love, right? That's not something I like to trade, right? That really hasn't returned any shareholder value. But, right, what we can look at here is you do have that higher low kind of forming here, right? So if you want to manage risk in a name like this, it's not something I'm going to touch, right? It's a penny stock, not names I tend to trade, but these are things where just risk management becomes huge. So when you zoom out, you kind of want to see on a longer term time frame, okay, where should I manage risk against? And so for those who like this name, it's not my pitch, not something I would trade, but you can kind of see the setup here is kind of a down channel that it's trying to make a move, but it really hasn't yet. It's kind of in that show me, prove it to me, you can make a move to the upside. So not a fan of that one, chat, but keep on sharing them. Next one we have, good name, Deere, Bellwether, great looking chart here, right? This is a good consolidation sideways, like we talked about, right? Those consolidation sideways can tend to resolve in the direction of the underlying trend. And so this is what I'm looking at here is a 5-year weekly chart. So why don't we zoom out a little bit more? Right, let's zoom out a little bit more here. And you can see this is a monthly chart of Deere, right? So you can see here Deere is in this long-term consolidation. It's really been consolidating since what? Shit, that's a pretty long time here for Deere. It's been consolidating for since 2021, about 46 months, about 4 years. It's been a sideways consolidation in Deere. I saw that name, Asia Broadband, probably a China play. Deere is also a China play. So if you like China plays, Deere is something I would be looking for. Maybe you're slowly adding exposure here, looking at that monthly time frame, and then on a daily time frame, this is what we like to see, right? We like to see that pullback to a longer term moving average, that 200-day, and kind of resolving higher here. And so if this is a name that you like, I see a lot of upside in something that's consolidated sideways for that long. Like I said, it's a longer term play if you're looking at it that way. Or if you're a shorter term play, right, you kind of have this breakout here and you could manage risk against that 429, 440 level here and just kind of maybe look to see if it'll get back to all time this breakout level here at 467. That gives you what, upside of 3-4% there. But this is a name, if you're looking at it for a longer term play, I would be adding on weakness as long as we kind of stay above this longer term moving average. So good name, Deere. Let's take a look at the classic name everyone is talking about right now. Right, big following on StockTwits and on Twitter for a name like this, Archer Aviation, right? So we'll just start with that zoomed out view once again, because we want to see these bigger levels we can manage risk against in charts like this. And what do we see here? We see a huge base, right, against that $8 level, right? When you guys get used to recognizing these things, it's not pattern recognition, right? It's supply and demand driven understanding of the market. And so that's what we want to see here. So you see this $8 level, $7.50, $8 level is where we had sellers come before. And now that level is turning into support here, right? And so this $8, $7.50 level is where we're seeing buyers step back in on a name like this, right? It's a high flyer, high volatility, but if you're a longer term person and you like it against that $8 level, you can see that huge volume here. And if this is a theme you know more about from a fundamental perspective and you like it, I would go for it there, right? I think against that $7.50, $8 level, you're not risking much. Which is the name of the game, right? Zooming in, right, it's a little bit more messy. You kind of have this breakout that's occurred, and then you're kind of below the 20, but above the 50. And so it might just be in purgatory here, trading sideways for a little bit. But yeah, I think Archer Aviation, if that's something that you're into, I think against that, so you can see that 750 lines up really well with that 50-day moving average. Probably wouldn't be in it below the 50-day unless you had a really long-term view of this chart. But that's a good name. One other thing I'll take a look at here in terms of this chart is volume by price. So you can see on the left side of this pane right here, this is called volume by price. And so you can see where there's a lot of supply and demand for, a lot of supply for a stock where a lot of shares have traded hands. These bars, the bigger the bar, the more supply that's traded hands. And so what you see in these bases, and what I like to see in these bases is when it gets to a polarity level, like here, you'll a lot of times see supply line up with it. And so that might be why in this instance you have this chop sideways, is because the names within here, there's people that have bought the IPO, got screwed, right? And then there's a lot of people who bought down here, right? Maybe long-term investors, maybe stinky bottom pickers, people who like to pick bottoms. And now we've seen the recovery. And so there might be a little bit of a fight here between the buyers and sellers, but that's a good thing, because strong stocks, when they get punched and they rebound. So we want to see stocks get punched to see how they respond. That also gives people who like the names a second opportunity to get in and manage risk, right? So $7.50 to $8 level in Archer Aviation, good looking name. TOPT, let's take a look. Top 20 shares ETF, USA, right? This is something just listed ETF by iShares. iShares is the largest ETF listing. So you're not going to see a lot of price history here. So we'll kind of zoom into that daily chart, right? And so it's a mess. I would say it's a mess from a daily perspective. If you want to own the top 20 stocks in the US, I don't know what you already have exposure to, but the S&P 500 is like 70% of the stocks that are the top 20 within the S&P. So I don't really see a reason here to buy the top 20 unless we got some relative performance. And so this bottom panel here is relative performance of this stock. Let me zoom in a little bit. So you can see here on a relative basis, it's kind of crap to bed, right? The past, was that 30 periods, the past month and a half. And so this isn't a name that I would be extremely interested in. If you want more juice, you want more exposure to the big names, a name you could look at is something like MAGS, right? Roundtree ETF, and this holds the top 7 names, right? Those MAG names equally. You have this down channel here, but you're above longer term moving averages, which I'll show here, right? You're kind of running into that 50-day. And so against this level we're looking at on the chart, I like this setup a lot more if you want to get more exposure to bigger names, right? I like this setup a little bit more against that $53 area. You have that former resistance becoming support, and then you're kind of making move off that 50-day, right? The one thing I would note here is you do have a downtrend, so you might want to wait for the break of this to the upside, and that's a chart I'll also highlight later in the deck. But good name overall. If you're looking at something like the top 20, I don't see a value out of that, especially if you have, a 401k or exposure. Another name similar to that you could look at is the top 50, right? Top 50 gives you a little bit more exposure, right? And then you can kind of see it's still that downtrend, down channel, and against that 50. So I would maybe look at those two names, MAGS and XLG, if that's something you're interested in. Chat, keep bringing the tickers. Keep bringing the tickers. We'll keep running through some of these. Next one, JBL. Ooh, who put this in the chat? This is a beauty. Love trading these types of patterns here. See the longer term trend? This is why we start with a zoomed out view. This company, you know what they do? They create shareholder value. That's what we like to see over long periods of time, right? Shareholder value creation and a big old base that looks like it's breaking out here. Chat, these are the types of charts you want to be looking at. This is what we want to see in the chat, right? Beauty. Very clean risk reward. Nice long-term uptrend. Nice base breakout. Confirmation with this overbought signal, right? So these are the types of names on a longer term basis we like to be adding to once we get that breakout, and you can manage risk against that 150, 155 area. Great chart from the chat. Great chart. If you're looking more tactically at that name, right, the market's fractal. When you start with that zoomed out view and then you zoom in, you can see it's the same pattern, right? You have that level to manage risk against right here. Ta-da, right? Same pattern, huge base breakout. Those are things we like to see. Good one, chat. J Bill, great name. Great name. All right. Wolf. Let's take a look. Ooh. I don't know about this. Look, we start zoomed out. Have they returned shareholder value? Do they look like they know what they're doing? for shareholders? I don't think so, right? I think this is fool's gold, right? We've seen a lot of big candles in this name. Big candle, right? This is a stock, you got to prove it to me. You got to prove it to me. You got to turn around and do something great. You know, I think this is kind of like, who do you want to consider this? Maybe George Pickens, right? This is like George Pickens, right? One good play, crazy, amazing catch, and then nothing, right? And then one good catch, and then nothing, right? So we don't want flashes of breakouts, right? We want sustainable uptrends. That's what we want to be investing in. This thing, I think we have overhead supply here, right? If you're a short seller, maybe this is a name you like, right? I assume the person who put this in the chat was looking at it with his eyes open, right? We like to look at charts with our eyes open. Maybe you short this sucker, right? Look at that. You kind of have that support, breakdown, and then further breakdown. This is something I would short, chat. So don't be sending me these ideas, trying to make me lose money. I'm not about that life, right? You don't want to be losing money in the market. ARRY, ARRY. Okay. Once again, kind of a messy longer term trend, but let's zoom in, right? Maybe we see something occurring underneath the surface, right? Still below this 200-day. What Paul Tudor Jones say about the 200-day? Nothing good happens below the 200-day. Guys, does it look like anything's good happened to this stock below that red line? Nah, right? Why would we be buying this? What are we doing here, right? I think, right, I don't know if there's a story here, right? Somebody's up 30% because they perfectly timed the bottom, but this isn't something I'm trying to invest in here, right? Like, there's easier trades out there. There's easier trades. What's this name do, chat? Huh? What's this name do? What's ARRY do? How do they make money, huh? ARRY Technologies. Let's look real quick. Manufactures and sells ground mounting tracking systems and solar projects in the U.S. That sounds like a lot of buzzwords to me, right? It's about $1 billion market cap, electrical equipment. You guys want electrical equipment companies? Don't be looking at this, right? You want electrical equipment companies that are going to benefit from the AI boom, from the energy boom. Look at something like PAVE, right? Global ex-US Infrastructure Development ETF. These are companies that make money, that print cash flow. And look, we had a pullback. And look, what do we talk about? We talk about those polarities levels, right? That's what we see here. So why are we looking at stuff like ARRY when we could be looking at something like this, chat? What do you think? Right? You start to see these things under the surface after you've done this long enough and you understand the dynamic of the markets. Like I said, CMT, but also a CPA. I like to understand the underlying moves in stocks like these. And we can see here we have this clear polarity zone. So if you want to play the AI infrastructure, you want to play those names, right? You can play them via stocks that are in extreme downtrends that get a pop every now and then. Or you can look at companies that actually return shareholder value, that actually print cash flow, right? That NVIDIA is going to sign contracts with these companies. And these companies are building the data centers. And these companies already have the infrastructure built out to where if NVIDIA goes, hey, we need a $10 billion order, companies like this can turn it around in a year, right? Whereas another company, that company's worth $1 billion. What type of contracts are they going to get, right? So I see a ton of upside in PAVE, right? If you like that U.S. infrastructure play, that's a name that I would maybe be taking a look at against that $40 level, see if we can get back to all-time highs. You can also see it trades well against the S&P 500 here in the bottom panel. But AARY, not my favorite, not something I'm into. All right, chat, keep the tickers coming. I'm going to run through them. Keep the tickers coming. That's why we're here. Path. This is a name I liked. This is a name that I hold dear to my heart, but it burnt me. It burnt me, chat. Like, I got burnt by this. I'll show you how. Let me show you what happened with me in this name. Right? Look what we had here last year. We had what we like to see. We had that base. Right? We had that base form. Right? But that's why we manage risks, because we had this base form here, Actually, it was right here I got long. Yep, it was against 20 bucks I got long. Got long against $20. It came down here, retested, got long again, and then once it broke 20, I was out. This was a sad story. I was not excited about this chart. So one thing I recommend, guys, is underlying trend. The primary trend is your friend, right? And you'll hear that, but you have to align your time frame for what you're trading. And I trade a little bit longer time frame. And I mean, does this look exciting to you guys? This looks like a bear flag, right? That looks like something that's just going to do this, right? Maybe it doesn't, right? Maybe you can accumulate down here if you're super long term or you have some insider information. I would say the insider information is, right, it's not good, right? Not returning shareholder value, not doing the things we like to see as a company. It's nice. It's had a nice rally, right? Respectable rally, but not a pitch I can hit systematically over and over again. Right? This is like swinging at a ball that you normally don't hit, and then you get on base, and then the next time you do it, you strike out, and then the next time you do it, you strike out, and then the next time you do it, you strike out. Right? I'm not trying to strike out. I swing at pitches that are my type of setups. It was more my type of setup over here back in 2023, 2024, but it never came to fruition. So good name though. Good name though. Weave, W-E-A-V. See? Here we go. Chat gets it. Chat gets it. I dig it, right? Longer term trends. Nice base, right? Recovery from this, right? If you were looking at this chart a couple years ago, right? You would have seen this. That's what we're talking about here. Zooming out, seeing these consolidation, these basing patterns, right? This is when people who understand the fundamentals are buying low, accumulating shares, right? They're sellers because people aren't sure yet, right? Then we make a higher low, right? Higher low here in the price. And then we guess what we do again? We make another higher low here in the price. And then it's off to the races. We get that breakout. This is beautiful, right? Got that breakout retest. Boom. What? What's that look like? Looks like AMAT, right? We talked about that earlier, that not a top pattern, right? And then it just keeps running. Nice. Higher low. Oops. Higher low. Right. Nice. Clean. Clean stuff. This is what we like to see. Clean patterns here. So I like this name. Good call, chat. Chat, whoever posted this, keep sending tickers. This is the type of stuff we like to see, right? Pulls back to this $14, $15 level. I'm buying. I'm buying it, right? I think at this point you have that high volume. You've had your flush outs. You've had your non-believers become believers. Good looking chart here, chat. I'm not familiar with this name. Good looking chart. Let me pull it up. Let's see what Weave does. Let's take a quick look at what Weave does. Software. Okay. IT, little software company. Software payments. Okay. I like the software payment space. I like the software payment space. I'll give you guys a couple other names in the software payment space. Here, this is bonus, right? I didn't plan on sharing these names, but I can't help myself. I can't help myself. I'm addicted to this stuff. I love charts. Look, zoomed out version. What do we got here, guys? Affirm. What are we doing here? What are we doing here? Chat, what are we doing here? I'm asking a question. What are we doing? We're buying. We're buying, right? Base breakout, base, cup and handle, retest. We're buying all day, every day, right? This one, Blend Labs, another name, fintech name, right? Kind of broke down below here, but you kind of manage risk here. But once again, that base, right? We like to see those bases. SoFi, right? Didn't even give you a chance to break back down, right? Kind of broke down against 13. But I like this space, guys. This is a space where you can look at these names. Look at that. Managing risk right there. I won't get into it today, but you can see RSI. You see these two red lines? See how RSI came down to that red line? It's staying above that. That's a sign of a strong uptrend. Good looking pattern in SoFi. So chat, great. Clap it up for the chat. That's a good. Weave is a good ticker. It's a good space to be involved in. Look at those types of names. Look at these basing patterns and then zoom in and find that setup you want to buy, right? Right here, we're starting to see a little bit of a pullback, but things are pulling back. So maybe it pulls back on that longer term time frame to this level here, that Weave chart. right? Get a nice little pullback here to 1350. That ain't nothing too serious, right? That ain't nothing too serious. Pull back here. What? Okay, 10, 12%. Maybe wait for it to come down. If not, right, buy at all-time highs. But right here, I wouldn't buy. It's kind of in no man's land. I would just either wait for all-time highs or wait for that pullback. But chat, those are the types of setups we like to see. All right, Oklo. Okay, Oklo. Longer term, looks like it was an IPO, a SPAC of some sorts, right? Got sent to the woodshed, and then it's rebounded, which we like to see, right? You see a lot of volume on that rebound too down here. So we like to see that. Longer term, right? This is kind of messy, so maybe this is a more tactical trade for somebody. And guess what? You look at that daily chart, we got a nice looking chart here. We got something we can work with here, huh? Looking at this here, kind of see it has this basing pattern forming. You don't have to get caught up in patterns and names. We just want to understand the language of the market. And the language of this is, while the market right on this bottom panel is Oklo versus the S&P 500, the market's corrected. Oklo's gained some relative strength, right? That's what we like to see, relative strength, right? If you buy a stock that's up 5%, you might feel good about yourself, but what if every other stock's up 10%? That's why we look at this relative strength, right? We want to compare it to others because we want to buy the best stocks because we're here to make money. We're here to make money. So Oklo, great looking chart, chat. I like it here. You could be buying this consolidation, right? Maybe this consolidation pulls back here to this level. See how that kind of lines up with that dip. It's not a coincidence. It's how price works. It's how price patterns work. Above 27, have fun with it, right? You could even add here against this 50-day, this light blue line here, add against this 50-day, anticipating a breakout. I react. I buy the breakout. I don't anticipate the breakout. Thought process behind that is simple. I'd rather buy something at a higher price and then have a cleaner level to manage risk against. That's all it is for me, guys. It's poker hands, not chess. Great chart by the chat. 7% today. So we have a mover here. So I like this. I would keep an eye on this, chat. These are the types of names you want to be keeping eyes on. Those stocks that are consolidating, looking for levels to buy against. Good stuff there, chat. LAES. I have no idea what this company does. Let's be real. Let's take a quick peek. Let's take a quick peek under the hood. All right, $147 million semiconductor name. It's a ripper, right? $4 stock. Once again, guys, I have my types of trades. This isn't my type of trade, but I would tell you it's not terrible setup. So if this is something that you're in, right? Like I said, not something I would necessarily trade. $143 million, not really types of stocks I tend to look at. I tend to look at $1 billion plus, but hey, we're here, right? Let's draw some risk reward levels. Let's play our poker hand. Let's set up the poker hand that we want to look at. Oh, what do you know? It's probably just a coincidence that there's a polarity level that it rebounded against, right? Just a coincidence. Psych. So great looking chart, right? I don't hate this. You can manage risk here against this 350 area. If it doesn't break out here, I probably wouldn't touch it, right? This is not something I necessarily like. It's up 9%. It's kind of below this 20-day. It might just chop here. But if it's something you're into, keep it on your radar. Maybe set a notification once it gets over 10 bucks. But that's a pretty big range, right? So there's a lot of time value of money associated with just sitting in this, right? There's opportunity costs just sitting in this, but you can kind of look here and see see that space. I shared a couple semiconductors I like. This isn't a name I would necessarily want to be in. I think there's other places you could be with your money. But hey, I'll tell you what. If you got in at this breakout and you're up 541%, congrats. Those good for you, right? But not my type of trade. All right, chat, keep them coming. I got Square. Fintech name, right? Beloved fintech name. Let's take a look at Square. Nice base, right? I like those other names I shared a little bit more, but chat, Look what we got here. Volume by price. Look at all that volume and all those shares that have traded there, right? That lets you know you're getting to a danger zone. You're getting to a level where people are going to fight, right? The fog of war or the front lines of battle, however you kind of want to phrase that. But you know, Square, you can honestly draw a level against that, right? And what's that line up with? Lines up with 80 bucks for a few reasons in these books behind me that were written 100 years ago, just about. Dow theory, right? John Murphy, right? Edwards and McGee. The founders of technical analysis understood price and human behavior. And this $80 level is a psychological level for people. And what you've seen under the surface is you've seen this basing pattern build, right? That's what we see here. We see this basing pattern building, right? Maybe I can talk today. That'd be cool, huh? You see that building here, and we have a good levels, right? You can see, what do we talk about? We talk about polarity, right? Resistance, resistance, resistance. Oh, what's it look like it's doing? Turning into support, right? So against 80, Square looks good. That's a good one, chat. Chat, you're looking good. You're finding these good setups. If you're not a base pattern, or you're more just looking at trend lines or something like that, kind of see the downtrends, right? You can kind of see the downtrend here. Kind of see it, kind of broke, and then we have this basing. Stan Weinstein, famous investor, has a book here. If you're a book person, right? Stan Weinstein, Secrets for Profiting in Bull and Bear Markets. He talks a lot about this, I don't want to call it cycle analysis, but stage analysis. So stage 1, stage 2 bases, and then buying those breakouts. I recommend that book to whoever in the chat sent Square. Good looking chart, good looking setup, great risk reward here. One other thing, chat, I haven't talked much about. We'll talk about it more in coming weeks. Look at RSI. You see how RSI here was trading below that middle line, and then now it looks like that middle line is becoming support, and then that lines up really well at this $80 level. That's what we see as a characteristic in the change of price, right? We're seeing that there's bulls taking control of momentum when momentum's above 50. So great chart by the chat here. I really like that name. Oh, someone said Tesla. Okay. I got a Tesla chart for you guys. I've been sharing this on StockTwits, so make sure you guys follow me at Hostile Charts, because the charts will be hostile. This is a chart I was actually going to share, so clap it up for the chat. Looks like you guys understand these types of setups. This thing's going to 500, right? This chart, share this tab instead. Oh, my bad, chat. My bad. Give me thumbs down. Sorry about that. Tesla. We're looking at Tesla here. We have a nice, huge base. This is a weekly chart, right? Tesla's going to 500, guys. Like, this isn't a matter of if, it's a matter of when, right? One of the most brilliant minds in the world has the political backing of a red wave politically, which basically means Congress, House, and President are going to take his opinion seriously, and they're going to want to align with him because he's, right, he aligns with Trump. And that's just how the world works, right? People do business with people they like, right? That's a good fact for you guys. That's why you be kind to others. That's why you build good reputations over time. People like to do business with people they like. Trump likes Tesla. If Trump likes Tesla, so does most Republicans, right? And so does the future of this company. And so huge base here, great levels to manage risk against, right? That 375 level, we're going to 500. Right? We're going to 500, right? That's not that. It's another 29-30%. I've shared this chart a lot. I think we're going to 500. If you're looking a little more tactically, it's a little messy, right? This price action is a little messy if we zoom in a touch. But still, good looking chart here, right? Good looking chart in Tesla. You can zoom out 2-3 years, right? Good looking base in Tesla, right? We talked a lot about these base pullbacks. What do we got here, chat? Say it with me. Base breakout pullback. Look at that thing, right? You zoom in, you can kind of see it, right? So chat, that's a good looking trade. Clap it up for whoever shared that in the chat. Tesla looks great here, right? Buy against that manage risk against that $400 level. Or if you're longer term, you can just set it and forget it if you want, right? But just manage risk against certain risk parameters. But I do like Tesla here. Palo Alto. Being honest, chat, not my type of trade, right? Nice long-term uptrends, but like, where's the patterns, right? Where's the risk reward scenarios that are in our favor on a like zoomed out chart, right? I don't see it. I don't see it as much as I would like, right? I see one here, that base breakout, right? I see overhead supply here, right? So I don't love Palo Alto Networks. Not something I'm in love with, but right, if tech and software get going, it's an area of the market that might do better. But software is actually kind of correcting right now, while semiconductors, money's rotating out of software and kind of into semiconductors, chat. So semiconductors is probably the place to be, right, versus software names in the short term. I can actually, I'll show you guys a quick chart relating that. Here we go. Right? You guys see it? Rotation was into software earlier, right? Last year, rotation out of semiconductors. And then now what are we seeing? Rotation back in, right? So these are software and semiconductors versus the S&P 500. And so when we see this relative, we can kind of see how it's performing. And so this is what we like to see. We like to start to see that outperformance in semis, but software is kind of correcting. And so I would be looking more at these semi names that I shared, and I would be looking less at some of these software names. And that's kind of how I see it. We had a failed breakout in software, but semiconductors look to be getting back on course. So good, right mindset, right? Overall, a good chart if you want to zoom out on Palo Alto Networks, but short term, not my trade. SMCI. What we doing here, chat? We like buying frauds, right? Kind of disrespectful. I'm a CPA by trade. I'm an accountant by trade, and you guys want me to buy an accounting fraud company? Come on, chat. What we doing? No, trying to burst my bubble, huh? Trying to get me upset today. Yeah, this name is like not something we want to, not something I want to be flirting with, right? Look at all this overhead supply here. Bunch of people bought this rip. That's what that shows me. A bunch of people were buying this. And guess how we can confirm that? This volume here, right? See how that aligns? All this upward volume aligned with volume by price. So what happens? All these people who bought here probably didn't sell here, right? Sorry, chat, if that's you. Chat, if that's you, I got you. You and the bears can get this tissue after the chat, right? I'll send you some tissues. But that's not a name I'm liking here. Not a name I want to be trading here. I want to stay away from it, right? There's other semis. I just showed you semis that are doing well. Why are we fiddling with this thing? Because it had one green candle, right? Nah, I'm not interested, right? Like, if anything, chat, are we taking this short? Am I looking at this wrong? Maybe you guys want to short this pup. You guys want to short this, huh? Not financial advice, right? Not financial advice, but against 3250, we might be shorting this puppy, right? Check that out. Rejection, support, tried to break out, little fake out, rejected, right? Clean risk reward to the short side, right? The short might break down, right? Say we go back and test this low here. That's 45%. Say we go to 20 bucks, right? 30 to 20. What are we looking at there, right? It's pretty good. So chat, shout out to you if you're shorting this. That's the only thing I would be doing with it, but not my trade, right? I'm not a short seller, but it doesn't look good here. This was a top, right? There's not a tops, and then there was a top. Like, that was a top, right? 85% drawdown, that's a top. There's a lot of people that are stuck in this thing that are going to want to sell, right? Because we see it. We see it here. We see all this volume. Look at all that volume. That's what bubbles look like. And then they drop 85%. And we like to short bubbles once they break down, right? We get in early, right? If you got in early in this bubble, congrats, right? But then once the train leaves the station, don't try to hop back on that pup, right? You're going to get ran over. But good chart, chat. I like that short. Good short idea, chat. Spotify, great name. Whoever put that in the chat, great name. Great, great, great chart. I love this chart. Good one from the chat. Look at Spotify here, right, guys? What do we have? Huge base. We have the biggest base of them all, right? We don't even need volume. Don't even need volume. Look at this thing. What do we think, chat? Right? Like, look at that. Huge, huge breakout there. So love Spotify, great looking chart, great long-term play. I'll give you guys a little inside baseball. Spotify looks a lot like Netflix, and they're basically, right, they do the same thing, right? But I think the music industry as a whole is much more immersive than Netflix. How many hours a day do people spend on Netflix versus Spotify, right? Think about that, chat. How many hours a day do you spend on Spotify versus Netflix, right? I'm never canceling my Spotify playlist, right? If I can't listen to Super Freak, right, that's my gym pump up song. Chat, what's your gym pump up song? Can you imagine not having music at the gym? Like, I'm fine without Netflix, but I cannot imagine a day of my life without Spotify. But we can have both, right? Let's look at these. Let's do a fun little experiment here, right? Let's look at this line chart real quick. You guys want to see how many charts I look at? You guys just give me a ticker, and I already know it looks exactly like another pattern. This is Secret Life of My Addiction, right? That's what this is. We're going to put this one solid thick, and we're going to do gold. Spotify, Netflix is going to be gold. Solid thick. Or move the moving averages. Look at that, chat. What do you think, chat? Twins. Spotify and Netflix, right? Netflix is in gold. Spotify's in blue, right? I own them both. Right? It's correlation, but still, I'd rather have Spotify than Netflix. I couldn't live a day without music. All right, let's move on. Great chart, chat. Dell Technologies. Not my type of chat. We got 5 minutes left, chat. Get your tickers in, all right? Get your tickers in you want me to look at. Dell Technology. Once again, what space is Dell in? Chat, what space is Dell in? Let me hear it. Software, technology, hardware, right? Technology, hardware / software, right? This is not the area that people are investing in when it comes to tech right now, right? And you can see that in this pattern, right? This is messy, right? That's a 40% price level, right? If you want to be cute, I'm not that cute, as you guys can see, but maybe there's something here, maybe, right? But there's better looking names in the technology space we've already talked about, chat. So zooming in, not my type of trade here, right? So Dell, average at best, chat. Stock Pika Bewiti by Kid Rock. That's go-to song in the gym. I'll add that to my playlist. Let me write that down. All right. Kid Rock. I dig it. I dig Kid Rock. I dig his music. Maple Bear. Good looking chart, chat. Maple Bear's good looking. What's Maple Bear do? What's Maple Bear do? Consumer staples. Doing business as Instacart. Maple Bear is Instacart. Okay. Chad, I'm a Costco guy, right? So Costco partners with Instacart. What I like about it is we get our proteins. We get all our non-produce from there. So I don't have to worry about who's picking it, right? Like if it's a box of Fairlife protein, they're all the same, right? So I like this chart. It's a good looking chart, chat. Right? What do we have here? We had that base breakout. Whoop. Right? And then now we have a consolidation and these moving averages are turning up. So yeah, I could see this getting to 50, seeing this like kind of draw it there a little bit if you want. But you see this consolidation pattern. I could see this resolving higher, chat. Just manage risk accordingly. But yeah, Maple Bear, Instacart. Good looking name overall, chat. So good stuff. Good stuff. Chat, that was awesome. Clap it up for the chat. Appreciate all the names. Appreciate all the tickers. Let me get back to a couple of charts I want to take a look at real quick, and then we'll hop off for the day. All right. Whoop. All right, chat. We talked about it. PAVE, P-A-V-E. P-A-V-E. Good looking name here, right? The infrastructure name I talked about. And chat, I appreciate the charts this week. Like I said, every Friday I'll be back. We'll do the CMT Lunch Hour. And follow me on Twitter. Follow me on StockTwits, more importantly, at Hostile Charts. And send me tickers throughout the week, right? I'll build a list, and then every Friday we can go through them and kind of go through some of those weekly charts, that upper time frame that I look at, right? You zoom out on the chart and then you can zoom in. And when you zoom out, you see the underlying trend, which is more important, because we don't want to be making 5%, right? We want to be making 50%, 80% on these longer term trades, because then you can go enjoy your weekend, right? Enjoy the time with your fam. A couple other charts I want to share real quick. RSP, S&P 500 equal weight, right? We had that same thing as financials, right? That RSI divergence, good looking chart. Tesla, we talked about, right? 500 is inevitable. It's like Thanos. I am inevitable. Tesla, $500 is inevitable. GE Vernova, right? Good looking energy play, right? Had that consolidation, right? And then we had a breakout this week. I believe it's up like 9-10%. So good trade, one for the good guys. Hood, we talked about some of those financial names. I believe Weave was in the chat. But like I mentioned, we have other names like Hood that look great. Financial names, right? Against 40. What do you notice here? All the overhead supply is behind it. And then guess what's happened since then? You start to see those bigger candles because there's not as many sellers, right? So that's what we like to see, chat. And those are my charts for the day. Guys, I appreciate the time. Like I said, I will be back every Friday at noon, right? Just put it on your calendar. StockTwits has a little link. Reach out for any questions at Hostile Charts. If you have any more book recommendations you want me to give, any insight to my process, just reach out there. I also have a Beehive. You can subscribe to my Beehive. And I share a lot of content there every Friday or Saturday morning. I send out my work. And let's just say, we got to get the tissues ready for the Bears, because this week was bullish. And so with that, guys, I will let you go. I appreciate the time. I appreciate the effort. And just one more clap up for the chat. Keep the tickers coming next week, guys. Make sure you tune in to the show. And much love.